The stock market crash is accelerating. We see the NASDAQ taking out fresh lows here, down 3.15% on the day, taking our overall losses here, peak to trough, down to at a peak of 12% for the NASDAQ. That's no laughing matter. That's a pretty good sell-off here for the NASDAQ. Take a look at the S&P 500, and you've got a move lower here of 8.25%. And the dollar index continues to lose ground here, down at this point 6% from its recent highs. That's a pretty good move for currencies. And we got to give respect to gold, holding up pretty well here. Just a slight pullback of 1.7% from the highs at the time of recording this. Gold is holding up decently, but you know what's holding up the best? TLT. Bonds are ripping here today, up 1.6% as yields drop on economic woes about the United States and the tariff situation. The tariff troubles are still heating up, and in this video, we're going to discuss if there's some opportunities in this market crash. Stay with me. Let's get started. Welcome back to the channel, guys. Do me a big favor as we get started. Hit the thumbs up button. I really appreciate it. It does help just to tell YouTube that you want to see more of my videos in the future. So the S&P 500 selling off, whether you trade it or not, I have something to discuss with you that is so important. Whether you trade gold or currency pairs or anything like that, this has a real effect that impacts everything. When the stock market drops like this, market sell-offs, market corrections, or even bear markets significantly change the landscape for every chart. Whether you trade gold, options, stocks, Forex, whatever you trade, this has big implications. I have a question for you to think about in order to help with this, which is, who invests in the stock market? Who has the biggest gains and losses in the stock market? Well, the answer is people that have money. Rich people invest in the stock market. Now, of course, the everyday person can, of course, participate, 401ks, things like that. But the biggest kind of players at the table when it comes to the stock market are investment advisory groups and wealth managers, people who have a lot of money or who are managing a lot of money on behalf of clients. And the wealth effect is something that I wanted to discuss with you guys here today, which is basically this concept of when the stock market is going up quite a bit, people who have a lot of invested money feel good and they spend more of it. And to express this from a personal standpoint, when the stock market is up quite a bit and a lot of my kind of long-term holds are doing quite well, I feel better, right? Your finances look better when the stock market is up if you're a long-term investor. So a lot of people, a lot of the wealthy class of the United States has probably started to feel a little bit differently about their spending habits now that the stock market has slashed about 10 to 15% of their portfolio's value. Who wouldn't be affected by the way that makes you feel? And that, my friends, has a huge impact on the dollar. And that's what I want to talk about here today. And on Sunday, I talked about the dollar index and the state or the problem that it currently faces, which is slowing economic data. But that slowing economic data has the potential to accelerate if you lose the upper end consumer. Now, I know poor rich people with their millions of dollars going down a little bit. I know people hate rich people, but here's the thing. They do play a really key part of the consumer basis in the state of the U.S. economy is propped up on consumer spending, and a lot of it has to do with the wealthy class. So the wealthy class losing a little bit of their portfolio may not sound like a big problem for people who don't have a ginormous portfolio, but for the economy, it is a big problem. The wealth effect is real. If people's house values or stock market value goes up or down a lot, it changes the way they behave. It changes the way they consume, and whether or not they pay for a new car or take a vacation that year, etc. Right? Just like layoffs can have a huge effect on people, so too can the wealth effect. And the stock market being down could cause some of that wealth effect to negatively impact the state of the U.S. economy. There's a bit of a self-fulfilling prophecy in markets. If people feel worse, they're less likely to spend. If they're less likely to spend, then that could materialize in the data and could continue to make that problem worse. It's a bit of a spiral that can take place when bad news can get worse and worse and worse. So with the NASDAQ down 3.2%, where's the bounce? Well, we talked about it last week. There was a key moving average. The 200-day moving average on the S&P 500 and the NASDAQ seems broken, at least at the time of recording this. Now, if we get a sharp bounce back and we start to rally back above that 200-day moving average, that could look positive. But for now, this is not looking good. Stocks are breaking key levels of structure. The 200-day moving average has been breached and has been completely violated for the NASDAQ, right? You see a big slide below, and that key long-term trend line seems to be be breaking as well. Again, we'll have to see how the daily chart closes here today, but it is looking bleak for stocks, and there may be room for continued selling to kind of correct this overall market. Now, I've said this on many occasions, but the further this goes down, the better I am, or the happier I am for long-term opportunities. Stocks dropping is a blessing in disguise. It feels awful in the moment, but in the long term, it gives us opportunities to buy stocks at better prices. So, I am watching and slowly buying the dip on stocks that I like, but in the short run, stocks continue to look heavily under pressure and quite bearish. So how does that impact the US dollar? Well, like I said, if you continue to see economic data declining for the US economy and the outlook, right, this could key levels for the dollar index could continue to break, and that could be a positive thing for things like gold, right? Gold is holding up really well amidst all this kind of sell pressure and chaos in markets, people uncertain about tariffs and Ukraine and Russia and the Middle East. There's so many things this year that have people a little bit on edge. And gold continues to be a place I think investors are sort of hiding out. Traders staying long on gold amidst all of this chaos, just as a way to kind of diversify and spread out from U.S. stocks. Another note on the stock market here is that you can see the put to call ratio, which shows the volume of puts relative to calls, is showing a huge amount of fear in this market right now. People are aggressively buying puts, aka bearish bets, to perhaps hedge their portfolio or even to speculate that the market will continue to go lower. This is why I want to be clear. I am not looking to short this market or be on the sell side of the stock market at this time. Now, of course, if I had done that in recent weeks, I'd be making a lot of money, but I've been on the sidelines here, and the reason I don't really love to short indices at times like this is because people get really fearful, and if there is some kind of good news that comes into this market, you could have a sharp bounce back in equities very, very quickly, since everybody seems to be on one side of the boat, aka bearish. We can also see in the AAII Investor Sentiment Survey, which we've been talking about a lot recently, there are huge bearish expectations from the trading and investing community, and so when everybody's bearish, I get pretty cautious to try and chase the same trade idea. That being said, if you get a week where we get a nice bounce back, perhaps the sell the rip mentality could actually be the better setup if you were to be bearish, in my personal opinion. Chasing it at the lows is a really hard trade. Yes, this thing could just tank another 3% tomorrow, but oftentimes when you get these really big capitulation moves, you'll see even within the last several weeks, these sharp, violent bounce backs intraday that can catch you pretty off guard if you are trying to short the lows. Taking a look at the top setups algorithm, you can see that pound US dollar, gold, and some pound pairs, euro pairs, silver, euro, a lot of bullishness for some counters to the US dollar, as well as the euro and the British pound. Here's a look at the British pound on the daily chart. You can see a huge breakout move has been taking place on this one. If we do see a pullback this week, this actually looks quite interesting to me for a possible long side continuation if the edge finder continues to give me confirmation. I'm also watching for some possible long trades on the euro, on silver, maybe even the DAX as well. I'm watching several markets here this week, and I have a lot of stuff pending for possible entries. And if you're not in our Discord group already, consider joining, especially today. We are offering a 35% off discount off of our memberships this week. So if you're interested in joining the VIP group and trading alongside myself, Ivan, and Frank within our group, you can see every trade that we're taking notified directly to your mobile device and to your desktop. Now, the perk of this is that you get to see the trades that I'm taking, but more importantly, you get to see the analysis behind each and every trade, why I'm entering, why I'm exiting, the risk management that I'm using, things like that. So if that's something that would be beneficial to you, if you're struggling on your trading journey, you want to take it more seriously in 2025, I highly recommend you take some time to check out our VIP group, see if it's right for you. And if it sounds like it's up your alley, especially if you're a swing trader or into macro and fundamentals, this is the group to join. There is a ton of value that is available to our members. And if you're not taking advantage of it already, this is a great opportunity at 35% off. Best way to get that 35% off discount is to send us a direct message using the first link in the description down below, or to check out a1trading.com/VIP. If we take a look at the commitment of traders data, which came out on Friday, we saw some interesting stuff this past week. You can see that there was a huge accumulation of Japanese yen long positions, which I thought was really interesting. That continues to be a theme that we've seen recently. Let's take a closer look at the Japanese yen. I've navigated over to our COT data history tab, and what you can see here is I've selected the Japanese yen in the top right to see what institutional money has been doing over time. And this is a pretty stark change over the last few weeks that we've seen. Japanese yen bullishness from institutional money has exploded in the last few weeks. You can see we went from, at one point, a massive majority of positioning on the short side of the Japanese yen to completely reversing that, and institutional positioning makes up 78.5% long in terms of a positioning weighting. So very clearly institutional money, these are hedge funds and banks and things that are reporting their holdings, massively bullish on the yen, as opposed to about a year ago where everybody was super bearish on the yen. We've seen that flip, and this is part of the reason I continue to be bullish on Japanese yen. Of course, if you have the Edge Finder, you can go through all of these things, and if you don't have a copy of the Edge Finder, we will extend that same offer, the 35% off, if you send us a direct message in the link in the description down below. Here's a look at dollar yen, completely breaking support here once again. New lows for dollar yen, lower highs, lower lows seems to be the pattern here, and again, that yen strength shining through. Now, sometimes people forget, for the newer currency traders out there, when I say I'm bullish on the Japanese yen, what that would mean is that I am bearish on things like USDJPY, because we're betting bearish US dollar, bullish Japanese yen. And the same thing can be seen in lots of different currency pairs, though the euro and the pound are holding up a lot better than the dollar here recently. But you can see CAD yen completely selling off, Aussie yen really seeing some new lows or pretty close to them, Swiss yen holding up decently well, Kiwi yen to the downside, etc. If you're looking to get funded this year, definitely check out today's video sponsor, DNA Funded. DNA Funded allows traders to trade over 800 different unique assets. They also offer profit sharing up to 90%, and they offer unlimited trading days on their 1 and 2 phase challenges. Using the promo code that is listed in our description down below, you can get a discount on any of their challenges. Definitely check them out if you're looking into getting funded this year. Make sure you do your due diligence, see if it's right for you, and that their style of challenges and accounts suit well with your trading style. With that said, now back to the video. The consumer in the last few years has been held up. A lot of the spending has been held up by who? Rich people. Who invests in the stock market? Rich people. People who have a lot of money in the stock market don't feel the effects of inflation as much, right? People who are on the wealthy end of things, they are not killed by rising egg prices. The middle class and people are impacted by that, but wealthy people, they're impacted by the stock market, because a lot of their income, a lot of their money is sitting in stocks. And when stocks really start to go up or down, there is a wealth effect that goes with it. So when somebody who has a lot of money in the stock market is spending willy-nilly, they're taking vacations, they're buying a second home because the stock market's up and they feel good, when that reverses, so too does the consumer sentiment of the wealthy, affluent class. And again, they make up a very large portion of the consumer base. There's something interesting here. So if you want to talk about dollar strength, right? Dollar strength, sometimes people like to say, oh, dollar down, stocks up, dollar up, stocks down. It certainly is not the case. Not always, right? There's actually low correlation between the dollar and S&P 500. The dollar down and stocks down right now is not good. And stock market going lower hurts, I think, the dollar case, because what that could mean is the wealth effect for rich people who make up the consumer strength kind of stronghold, people buying American Express cards and, maxing out and spend a bunch of money on stuff, right? If they start to feel the effects of a slowing economy in the form of their portfolio, that impacts the consumer, which is, of course, a core component to dollar strength. So, who's benefiting recently from some of that? Well, FEZ is the Euro stock market. Europeans might have a little bit of extra change. Maybe the euro's a little strong because of that. There is some correlation. Remember, all markets in some way or another move together or they impact one another. So stocks do impact currencies and vice versa. Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things, all of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.